Hi, this is Binu Joseph from Inditrade. This week the market will be looking forward for the decisions from US and Indian Central Bank to decide its next direction. Markets rallied 16% from its intraday low in the last 12 trading sessions. The August WPI inflation data will be released on Monday, could be on the higher side due to the base effect. The initial figures of advanced tax are mixed and more numbers are expected at the beginning of the week, which will give cues about the Q2 results. US Dow futures and Asian markets moved up on the start of the week after the news came that Larry Summers, who is more hawkish in terms of policies, withdrew his name from consideration for Federal Reserve Chairman. What happens at the FOMC meeting on September 17th to 18th could have a ripple effect on global markets. US Fed, which has flooded financial markets with $2.75 trillion over the past 5 years, were supported all the asset classes rally, especially emerging markets. The scale of the tapering and what Fed chairman says at his press conference are the key factor to watch. In last May, the Fed has said it would wind down its program if it is confident that the economy is improving. In the last 2 months, investors have already done a lot of work in absorbing the Fed's message. The US bond yields are now near 2-year highs. The poll showed that there will be a $10 billion cut in US bond purchase program. However, the Fed meeting runs the risk of surprising markets if it moves too quickly than a $10 billion cut. India is among the markets that will be affected if it is larger than a 10 billion cut. If this meeting fails to provide any decision, then global markets could rally post the event. Indian markets will closely watch the RBI policy review on September 20th, followed by the press conference. The new RBI governor postponed policy meet to September 20th in order to accommodate the US Fed decision in his policy. The first monetary policy by Raghuram Rajan might not bring any interest rate cut due to the pressure on the rupee. However, we could see a volatility towards the weekend. The indices remained range bound in the last 3 trading sessions. The market requires some strong reason for the rally to continue, and for that the FOMC and RBI decision would be critical. The first important resistance for Nifty is at 5968 level. If we get no tapering or as expected levels of $10 billion cut and RBI issues some positive signals, then above 5968, the major resistance in the short term is at 6091. The weekly chart also indicates some positive trend. The slow stochastic gives positive signal, MACD positive, then RSI also gives some positive signal. Last week Nifty closed above this trend line and currently in this channel. However, some of the indicators are losing its upward momentum in the last couple of days. The RSI touched the upper level of Bollinger Band, and in the past, whenever RSI touched the upper level, it followed by a sharp correction. So watch out that trend. The slow stochastic also in the overbought zone. So after the FOMC meet on Thursday, if Nifty closed lower, then it could be a start of a prolonged correction in the market. So watch out Nifty, the critical support level at 5720, and if it breaks this level and closes below, then 5578 could be the important short-term support level. Thank you for watching the video. Disclaimer.